Perhaps you would like to start investing this year, or maybe you have been investing for the long term and you're looking to add some different ETFs into your investment portfolio. Hello, my name's Rachel, and in today's video we will be going through 6 of the very best ETFs that are available on the market at the moment for high returns, a diverse portfolio and low fees. So I'll be going through these 6 ETFs in order of highest returns to lowest returns. However, what's really important to mention is that often when you're looking at high returns, you are looking at higher risk levels. So we are going to be talking about the risk levels. So although you might not be interested in seeing the ETFs at the end that have lower returns, they also have lower risk levels. So if you're looking to start an investment portfolio and you want to lower your risk level, then it might be worth watching until the end. But I will put timestamps in the video, so if you want to skip on to the next ETF, then you can do that. So for full transparency, I am invested in 3 of these 6 different ETFs, and I'm going to be giving you all of the information that I considered when I made these choices over alternative ETFs. So we're going to be covering these ETFs in a good amount of detail in this video. So we'll cover the returns. We're going to be looking at annualized returns. So we're going to look at annualized returns for 1 year, 5 year, and if this ETF has been established for more than 10 years, then we'll also be looking at 10-year annualized returns as well. You probably already know that ETFs do tend to have very low fees, and every ETF that I'm including in this video has fees of 0.3% or lower. However, we do know that fees really do compound over time. So wherever possible, if you're looking at a very similar ETF, you want to go with the one with lower fees. I mentioned earlier in the video, higher risk levels often going hand in hand with higher returns. Now, when I'm talking about risk levels in this video, we're going to be looking at 3-year standard deviation. This is a good measure of risk, and the higher the standard deviation, the more risky an investment is. And where all else is the same, you'd want to look for an ETF with a lower standard deviation. And then the final element that I'm including in this video is the number of equity holdings within each ETF. So you all know that one of the benefits of investing in an ETF is that when you make that one single investment, you are getting a bundle of different stocks. So it's important to know how many different stocks you are getting in your ETF and how diverse is that ETF. Now, what I will say is you're likely to see the top 5 holdings within these ETFs be very, very similar. So you're going to see the likes of Apple, Microsoft, Amazon, Nvidia, and Meta as top holdings within these ETFs. But I'm going to share with you how many other holdings beyond those top 5 that are in each and every ETF. Without further ado, let's get started. The first ETF that I want to share with you today is the iShares S&P 500 Information Technology Sector ETF. The code for this is IITU, and if you've watched my channel before, you will know that I am invested in this ETF and I've been incredibly pleased with the performance of it. So its 1-year annualized returns are 44.36%, its 5-year annualized returns are 25.23%, and there are no 10-year annualized returns for this ETF simply because it hasn't been established that long. The fees and charges for this ETF are nice and low at 0.15%, but the 3-year standard deviation is high, it's 19.31. So as I said, the higher the standard deviation, the more risky the investment. So this is a risky investment. However, where you take on more risk, you do expect to see higher returns. Obviously, this isn't always the case. And the number of equity holdings within this ETF is 69. So as I said, this is the S&P 500, where you've got those 500 different stocks, but it's taking the information technology stocks out of that ETF, so those 69 information technology stocks, and making a new ETF out of those. Okay, moving on to an investment which I used to have, but I'm now invested in IITU instead, but it is a NASDAQ 100 ETF. So the one I'm sharing with you today is the iShares NASDAQ 100 ETF. The code for it is CNX1, and it's important to mention that this is an accumulating NASDAQ 100 ETF. The IITU ETF that I previously mentioned is also an accumulation ETF. Now, what an accumulation ETF is simply means that dividends are reinvested into this ETF rather than being paid out to you. If you're investing in an income or a distribution ETF, then the dividends are paid out to you. Whereas with the case of these 2 ETFs, they are simply reinvested. Okay, 1 year annualized returns are 31.88%, 5-year annualized returns are 20.77%, and 10-year annualized returns are 20.45%. The fees and charges are 0.3% for this ETF. Now, obviously, this is a very tech-heavy NASDAQ ETF, but the reason that I chose to go with the IITU ETF as an alternative is simply because the performance has been better and the fees are lower. However, what I will say is that NASDAQ ETFs have been established for longer. This one has been established for over 10 years, so you can see those 10-year annualized returns of 20.45%. So if you're a person that doesn't want to invest in an ETF, if you can't see 10 or more historical years returns, then you might be more interested in investing in a NASDAQ ETF rather than investing in IITU. Another couple of benefits of investing in this ETF over the previous one is that it has a 3-year standard deviation that's slightly lower at 18.03, and it has 101 equity holdings. Obviously, it's the NASDAQ 100. So those are the reasons why you might choose one or the other. What I will say is I personally would only invest in one of these ETFs. They are both very tech-heavy ETFs. There's going to be a huge amount of crossover in the holdings within these ETFs. So I've tried to give you some reasons as to why you might choose one or the other. As I said, I chose to go with IITU, but there are many reasons why you might prefer to invest in just a NASDAQ ETF. Okay, moving on to the next two ETFs. This first one is one that I am also investing in. It is the UBS S&P 500 ESG ETF. The code for this one is S5SD. This is an income generating ETF, so those dividends are paid out. The 1 year annualized returns for this ETF are 29.42%, and its 5-year annualized returns are 16.44%. It hasn't been established for 10 years, so there are no 10-year annualized returns. So this ETF has been screened for ESG, which stands for Environmental, Social and Governance. So this is the S&P 500, and then it has been screened for those ESG factors. That means that rather than having 500 holdings in this ETF, there are currently 314. What I will say is I often hear people that are very interested in investing in ESG investments, or some people are put off by ESG. However, for this ETF, the 5-year annualized returns past performance has actually exceeded a standard S&P 500 ETF, and that is the reason, among other reasons, why I have chosen to invest in this ETF. Now, you might just want to go with a very standard S&P 500 with low fees, and that's where our next ETF comes in, which is your Vanguard S&P 500 ETF. The code for this is VUSA, and it's an incredibly popular ETF. The 1 year annualized returns for this ETF are 29.78%, 5-year annualized returns are 15.55%, and 10-year annualized returns are 15.03%. The fees for this are lower than the previous ETF at 0.07%. 3-year standard deviation is 12.38, so actually slightly higher than the previous standard deviation for that ESG screened S&P 500 ETF, and there are 503 equity holdings within this ETF at present. Okay, moving on to our final two ETFs. These both have much lower standard deviations. They're much less risky. They provide a really nice diverse portfolio that is very beginner friendly or expert investor alike, and they are obviously FTSE or World ETFs. So you're getting a huge diverse portfolio when you invest in a FTSE or World ETF. It will cover the whole world, obviously predominantly the US at the moment, but it provides a high level of diversity to your portfolio with a lower level of risk if that is what you're interested in. So the first ETF, and one that I'm personally invested in, is the Invesco FTSE All World ETF. The code for this is FWRG, and it's an accumulating ETF. So as I said before, those dividends are paid back in. The 1 year annualized returns are a whopping 22.79%, which is actually phenomenal for an all world ETF. This ETF is fairly new, so it doesn't have 5 or 10 year annualized returns, but I went with it simply because the fees are very low at 0.15%, and it's a very basic FTSE All World ETF. So where possible, as I said before, you're going to look for ETFs that have lower fees, and this one does. So that's why I've gone with it. It has a whopping 2,416 holdings within this ETF. So when you are making that single investment, you are getting a slice of thousands of different stocks. So the alternative ETF that I wanted to include in this video is Vanguard's FTSE All World. The code, if you want the accumulating one, is VWRP. It has 1 year annualized returns of 22.53% and 5 year annualized returns of 11.33%. Again, this accumulation version hasn't been established for over 10 years, so there's no 10-year annualized returns. However, if you wanted to, you could go ahead and look at VWRL, which is the income generating ETF version for this, and you could have a look at the annualized returns there because that's been established for longer. Fees and charges are 0.22%. 3-year standard deviation for this ETF is 10.31, so much lower standard deviation than you are seeing for the rest of the ETFs in this portfolio. We can't see the 3-year standard deviation for the Invesco FTSE All World because it hasn't been established for 3 years. However, looking at the 1 year standard deviation, it tracks very closely to the Vanguard FTSE All World. So they are going to be very similar ETFs. The number of equity holdings within this ETF are 3,618. So it's a huge ETF providing you with a great amount of diversity, and it's perfect if you want to hold only one ETF in your investment portfolio. You're getting a diverse portfolio with very low effort and low fees too. Thank you so much for taking the time to watch this video. Let me know in the comments down below if you have any questions or suggestions for future videos. I've had so many really helpful suggestions in the comments for future videos. I made a list of them and I'm going to be working through them over the course of the year. So thank you all for your efforts coming up with suggestions, and thank you all for any comments or likes that you've made on my previous videos. It is so appreciated. All right then, have a lovely day and happy investing. Bye bye.